What's going on, traders? How we do it? You guys made it right here to Money Mitch. We're going to be watching to what happened in the Fed. We'll look for what stocks are hot. We're going to do a screener on 200-day SMA. Stay right here, guys. We got a lot to go through. I'll even give you guys the live trade on DKNG. What happened? Find out all on Money Mitch. It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch. What's going on, traders? How we doing out there? I know I have a little bit of background music also, so let me know if for any reason it gets a little too loud. Just want to go ahead and get the show started. Let's go ahead. Let's take a look, see what we're seeing out there in the market. All right, I'm actually going to pull that off because I want to take a look here at the SPY. Let's take a look here. The SPY really coming down here, and my levels of concern, right? We've been talking about them are 428. Look how when we came down and we spooked, we came right towards what? 428.86. This is so important, guys. Definitely be paying attention to that 428 and seeing if we're going to find that level or not, guys. Not loud enough on the music. Yeah, I just turned it down right now a little bit as we are going to explain here. I'm going to actually show you video exactly what brought us down. So one thing that we talked about on Money Mitch yesterday is what could potentially happen with the Fed and when it could actually come. What kind of comments should we look for to go ahead and kind of bring us down, right? And so if you guys remember yesterday, I was talking about concerns of what selling off the assets. Watch this question here. This question is coming in from a Wall Street journalist here, and he's going to ask the question about the assets. I'm going to go ahead and play it.
Chair Powell, Nick Timmerhouse of the Wall Street Journal. I have a couple of questions on the balance sheet. The statement on the balance sheet today calls for significantly reducing your holdings. What does that mean? And then apart from moving sooner and faster to shrink the holdings, are there any other ways in which you and your colleagues are seriously thinking about recalibrating this process? And finally, how much disagreement is there around how you should use this tool, including active sales rather than passive sales or changes in the composition of reinvestments? Thank you.
So I'm afraid to tell you that those are all great questions, and they're questions that the committee is just turning to now. So we had a discussion, as you know, at the last meeting, an introductory discussion of the balance sheet and teeing up of the issues. At this meeting, we've gone through and carefully put together a set of principles at a high level, and those are meant to guide the actual decisions we'll make about the pace and about all of the questions that you're asking. And I expect that this process will be something that we spend time on in coming meetings. I can't tell you how many, I can't tell you how long it will take, and then, at the
Right then and there, guys, we start seeing the market really just get hit hard. And so I think this is very important to pay attention to. I was watching literally the minute chart. And where did that happen, guys? That happened right here. I'll show you guys exactly. So right around right here at this 241 period is when that gets mentioned. Right there, we start clicking off from the top. Then we hit to the bottom of that range, and that's when we really start flushing down towards the bottom of the range in the SPY. That's why I was paying attention to Powell's comments specifically on the selling of the assets, because one thing has always been known. The tapering has been known. The other thing that has been known, interest rates are going up. One thing that came out in the December minutes that shook investors was the mention of the assets probably being sold off. This is what the same thing that Goldman Sachs warned about on the weekend. They said, watch for the Fed to talk about selling off of the assets. This is $7 trillion, guys. This is going to take a long time. And if they do it fast, they'll probably just wipe out the market, really. I mean, think about it. I mean, $7 trillion is not easy to just start selling. And what I talked about yesterday, this is completely different than someone having their hand on the buy button, hitting buy, and determining the stop. That's tapering and stopping the buying. But what is really being talked about now is not only the hand on being pulled off the buy button, but the hand actually being pressed on the sell button. That's going to affect the market and could really kind of knock us down here. It's not what I wanted to hear, but hey, it's not about what I want to hear. It's about what is being said. And that, I think, was a major point in the market. All right, guys. So one thing I wanted to do to us, let's get a little bit into different mode here. We definitely want to go ahead and try to find different stocks, right? And so I'm actually going to bring on one of our other hosts on a different show. Let's bring him on here. Christopher, he was just on. He does back testing, but I can tell you one thing that I can always have heard from Christopher is look for that 200-day SMA. Is it bull or bear? Start there. Don't go anywhere if you can't even start there. So welcome to the show, Chris.
Dude, thank you so much. I hope that my sound is better now. I restarted everything, and I think it's good to go now. Technicals this kind of day, right? Speaking of technicals, one super easy thing you can put in your chart is a 200-day moving average. Dude, just having that alone is the easiest, fastest way to see if something's bullish or bearish. And dude, we are now below the 200-day on the SPY. We're below the 200-day on the Qs.
Yep.
Things are not at all a beautiful place to be and invest in right now, right? Unless you're looking to go short. But we haven't been below the 200-day since before the COVID crash.
Yeah.
So right now it's real tippy-toey, real ticky-tacky right there. I'm not sure which direction it's going to go, but I'll tell you right now, this is set up to be a very bearish trend at the moment.
Yeah, it looks like we're still having a little bit of issues in your mic. It was working there for a second, but I'm not sure. The noise gate is cutting you off a little bit, and so it sounds like you get cut off, but it's just the mic not picking you up. I know because I've been battling with my EQ. I just got a new mixer, so I kind of know that it's probably the noise gate. I've been working on it myself. So let's get into it. So what I wanted to do specifically, and this is a mention out there for, I think it was Easy, or was it BNZ? I'm pretty sure it was Easy that mentioned this. And he wanted to do a little bit of a look into the stocks that are actually up. So I told him to come on over. Let's take a look, right? And so I'm going to actually use FinViz here. So it's a free scanning tool here. You guys can just look that up. This is a stock screener on FinViz. And so I selected a couple things. So we have two different scanners here available to us. We have where we can look here and we can look at the price of the stocks that are below and have relative volume. So stocks that we can potentially be looking for shorts. That's what I would be looking on this one. There's about 238 there. There's really like 6,900 stocks there. But I'm going to look at the stocks that are actually above their SMA 200. And then we're going to look for performance week up. So at least for the week, it's up on the week. And then we're going to use a descriptive one here, and we're just going to use relative volume over 3. So at least showing us that this is probably being traded and watched by traders. So let's take a look here at what stocks are available. There's only 43. There's only 43 that are above the SMA 200 and have relative volume 3 and are up for the week. That's not too positive, guys. I can tell you that at least we're out the top. Normally, this would probably be in the hundreds, if not close towards, let's say, 300 or 400 at least, to show us a little bit of strength. 43 stocks kind of worries me. And then when I take a look at the stocks that are here, it's lower market cap money here that's leading. And so you see like stocks like Shift Pixie. You see Sierra Oncology here. And oncology stock, I mean, they probably had some news here, biotechs, to kind of push it on up, but you don't see big names here. This kind of shows me that we should be a little bit concerned about, of course, some of these bigger names. I mean, you're even seeing the ultra short show up here. So that's not what we want to be seeing. But of course, we could take a look at some of these to see if there's any of these that actually look like we could get a trade on them, right? So I put it by the percentage change for the day right now. Of course, you get Sierra on there. Pixie's probably about the only one that I can see here that's having a little bit of a chart. So let's go ahead. Let's take a little bit look into Pixie.
You know, Mitch, one of the things that my mentors told me, right? And my mentors were stock market wizards. My mentors were U.S. investing champions. My mentors told me, you don't have to trade.
Mhm.
You can sit out. You can wait.
Exactly.
You can wait as long as it takes to get to that correct, right setup that you need that fits your risk tolerances. And there's a lot of people right now that should be waiting, should be sitting on the sideline, but they've been so used to the buy the dips, right? I
Mhm.
can tell you without a doubt, I've seen some real sketchy people on YouTube, not you and I, obviously, not on this channel, but some other channels that have a lot of subscribers that are like, oh, this stock's down, I'm going to buy the mess out of it.
Yeah,
And
I
they're
mean, I've
just
been talking about it
be ruined.
here. CNBC's been recommending PayPal for 3 weeks now. 3 weeks.
Let me look up PayPal real quick. I want to see it. I want to see it.
Dude,
Oh my
3
gosh.
weeks?
Dude, it's like
I had
it's $100 below its 200 day.
They
No
had
thanks.
4 money managers push it, and they said, "Yeah, I get it. I get it." I was like, "Whoa, guys, what are we doing? Why are we just reaching for stocks?" That's what it is. It's reaching, especially when your 200 days all the way up here. Your 50 day is you're still extended even from the 50 day. It's not
You
even
know,
like the 50s coming close to it. And then look, I have like an EMA 9, not maybe your EMA 10, but EMA 9, it's still above it. We kind of have to at least get back into that zone
there's a lot
before
of
we see
people
it.
that think when stocks go down 50% or more, like this has, hey, this is a scoopy, right? This is an opportunity. I'm going to be a contrarian trader. I'm looking to catch up on getting this huge discount in PayPal. But the thing is that when the trend is going, everybody who was a participant is getting out. Everybody who used to want to own this stock doesn't anymore, and their pockets are bigger than yours, and that's why the market's moving the way that it is. So I'm not going to fight it, Mitch. I don't think you should fight it or anybody else listening out there.
Yeah, and if you are trading stocks that you're trading to the upside, I say, you got to take a look at what you're doing, right? I mean, right now is the time where I as a swing trader, I'm not taking a single swing trade. If I do take a day trade, that's just because I run live trading with Benzinga. A lot of people want to see some action. I can still knock out a day trade or two, but it's not my winning. It's not my bread and butter. It's where I have a separate account just for that. That's just literally money that I can lose. My money that I can win and I want to protect, guess what? That's being put to rest right now. Just like Christopher said, you don't need to trade if you don't see the environment that is for your strategy. So now let's talk a little bit about Pixie, though. We started talking about stocks that had high relative volume. So the stock on average trades, let's say 1.3 million. The stock's trading now 24 million shares a day. So that's a good sign. At least we
That's
have
a good sign.
some people are trading it, right? Then we can go quickly at looking at the moving averages. You can see the SMA 200 right on there. Not that bad. If we can get above that, the bulls can take control, right? One thing to note also, the 50 below it and a good distance below it. Also the 9 curving below it and trying to get closer and closer to that 200.
I was just pulling up the 50 on mine because that's what they call the golden cross, the 50 over the 200. Hasn't happened yet, but it's moving in that direction, which is a positive sign you want to see.
Yeah, the curl is starting to do it, right? When we get the price action to go up, what happens to the moving averages? We slowly start getting a curl to the upside. And as the moving average gets bigger, it's smoother. So of course, we'll see that curve come first showing up on the 9, then showing up on that 50. Then we'll start seeing even the 200 day start making a little bit of a move back up. All right. So one thing to point out also on Pixie is that this looks like a nice cup and handle pattern. Another pattern that is usually done not too bad on the upside. So you got, your like cup action down here. It comes back on up. It pulls back for us, comes and tries to create the handle now. Now you just I would really want is kind of this basing action down here around this 140 kind of hold and really the stock just take off. I mean, that's what we kind of need it to do. If it's going to be a cup and handle, it should get back above that close resistance where you keep seeing the close kind of fight, which is this high right here, 175. It keeps fighting to close above that now. So that's the level I'd be watching tomorrow to see if we can get back above. And if you take a look at the hourly, and I love to look at hourly charts, I think they're one of my favorite charts to look at. You really can kind of see these peaks And now it just needs to kind of hold underneath here and really take out the $2. If it takes out $2, I know that on the daily, it's going to be looking like a nice bullish pattern. On the hourly, it's going to be looking like a nice bullish pattern. On the 15, we're probably going to be looking bullish because we're going to get back above these levels and push up there towards the 2. And you could go all the way back towards the 1 if you're a 1-minute trader. And I'm sure you're going to probably start seeing a bullish pattern. So multi-time frame to the upside. I think this is one that we put on our radar. Doesn't necessarily mean that we need to trade this, but if this is what you're looking for and you're looking for momentum stocks and you're looking to trade to the upside, I say you definitely first start off at the 200, see if you can get that 200. If it's below it, that can give you a little bit of a sign that, hey, maybe you can trade this stock in this environment. But for right now, there's not many on the list. That's what I really
No, there's not. But you know what's cool, and I'm glad you brought up the Head and Shoulders, because that is something where so my brain is super data focused, right? I don't know if it's left brain or right brain. It doesn't really matter. But when I see like chart, when I see somebody who maybe on Twitter or in a book or something like that, and they're drawing out exactly how their shape fits, I'm like, I don't see that. But I can really see this cup and handle that you're talking about right here. And for that to be valid, it's going to hit 175 and stay there and go up, right?
Yeah.
And really, all you got to do is keep your risk in check. If you feel like this is a valid setup, put your stop at 174, 170, something like that. Just give it a little bit of room to breathe and a lot of room to go if it does work. And if it doesn't work, you're only losing a couple pennies.
Yeah, I mean, I'm a big pattern guy. I try to see them. It's just something that I've always looked for, and if I could see them, I call them out. And I think this is a clear example of a cup and handle here that didn't look bad. I'm going to show you another example of a cup and handle that we had even today on the intraday, and it was on what? It was on the Qs, man, on the Qs. For a second there, we had a cup and handle, and then it started breaking on out, and it didn't want to hold. And so this is where you kind of get that look that, hey, you know, we always have to be careful here because you can always get caught. A lot of times you can get caught in the market, and I think it was yesterday. That's what it was. That's why I'm missing it out. Here it is. I have it drawn out. That's why I was looking. I was like, I drew it out. Here it is. So this was yesterday. Yesterday at 9:30, what do you get? You get that same kind of look, that drop off, cup above, holding the VWAP, and then it pushes on up. Let me just make sure that this was yesterday, not today. 26, yeah, it's today, 9:30. Yeah, I just was so up close on the 1 minute that I had to scroll back there. But you could see here, and it fought to what? Get above this resistance, this 353, and this was the level that we called out in pre-market. Be careful that you couldn't get above that. Look how you fought it right at the gates. You fought it, boom, it came back down. You fought it, 1, 2, 3 candles, couldn't even hold up there. After that, that's when I really started being like, uh-oh, this doesn't look good. Doesn't look good. What happens? Boom, you get that kind of effect where it comes back below, holds that VWAP, and then you get people just starting to sell off of that VWAP. So this was an interesting one too. Cup and handle is a pattern that I don't mind trading. I like to get them on the handle and looking to hold off of a prior support and not waiting for the breakout. Some people like to trade it on the breakout. I just seen a lot of them fail for me. And so I personally try to get it a little bit before into the move and hold off of this support that's created here on the handle.
I'll tell you what, everything that you're talking about as far as the fail breakouts, like that's this market right now. Yeah. Everything's wanting a pop and then just comes right back down. I'm sure people in the chat know what I'm talking about, right? Smash like if you do.
Yeah, and no, it is. It's been that type of time for real. I've been fighting to hold stocks for what I call, continuation moves, right? You're just not seeing them. And so today I actually took a trade on DraftKings. I'm going to go ahead and play a clip here so that you guys could see how I set up this trade, and then we'll talk a little bit about it. All right, guys, I'm going to give you a completely drawn out trade here for DraftKings, right? I always talk about the rule of 3, right? So I've drawn it out already for you. 1 resistance, 2 resistance. We're going to look for the third try here. It needs to come up towards this trend line, create a resistance, hold the pullback, and then look for the breakout. That's what I'll be looking. That's why you can see those lines drawn out. Let's see what happens in DraftKings and see if we can nail this trade right here on, of course, none other than live trading with Benzinga, baby. Let's go. Let's go. Can we get this drawn out perfectly? Is it going to play to the key here? Look at that. third resistance, pull back, hold of it. Let's go, DraftKings. Let's go. Get to the moon. I would go and measure the flag. I'd measure this flag, and this flag is $1.12. So from the breakout point, I'm going to look for $1.12 to get me that extension all the way up. So I can look for like pretty much like $1 up here. So I'll call from 2170 to 2270. If it can get on up there just today, we'll take the
We got a
profit.
high of day on
but
it now.
we'll let
Good
it
job,
keep
man.
going.
You
Let's
taking
go.
profits here?
No, we already took profits in the 2160s, which was in that consolidation right at the top. And so now we can I still have 2/3 of the position. Let it ride. All right, guys, let's keep going, guys. Let's see what's going on out there in the market. How's DKNG doing? Let's see what's going on out there. All right, so a little mute trick there, but let's go ahead. Let's take a look there at that DraftKings trade. So this was a trade off of the 1 minute, really. And I mean, what I talked about is that you could look at multi-time frames. This one lined up also with multi-time frame. This was a clear kind of a flag pattern here. You can call it a pennant because it has a horizontal support there. The rule of three coming into play here. So a lot of times I look for the rule of three. And why does that rule of three exist? I ended up finding out as I did further and further search into my knowledge that this is just an Elliott wave 3. It's a 3-3-3-3 rule, and it comes into play, and it plays out often. So where you get the resistance to try multiple times. And so when we were on this candle right here, this is when I started taking the look and calling out the trade. This is what I want to do a little bit more on live trading, because sometimes, a lot of times when we get like technicals and we talk about technicals, it's going to be kind of wishy-washy, right? A lot of people say, oh, this is the point to buy, this is the point to sell, but you can get into a lot of that mix there, right? And so what I want to do is trying to keep it objective. At this point, we know exactly what the pattern looks like. We know where our entry should be. We know what the risk and reward should be. That's a complete trading plan. That's the way I want to be trading. I don't want to be trading subjectively here. I want to be trying to be objective and give the full plan out. So that's what I'm trying to do more and more on live trading, is give that full plan out. Of course, there's going to be times where the market kind of turns around on you, or other things kind of happen where you just have to protect your gains or your position in the first place. Because, we know, right, Chris, risk management comes always first.
Primary. Before you even think about how much money you're going to make, you need to know how much money are you going to stand to lose before anything.
I always talk about the profit to loss ratio. If you don't have that in mind, you lose all mathematical advantage to begin with. That's an edge. We don't want to give that up. It's already hard to get an edge in the market. So if you can't stick to that profit to loss ratio, that might be something that you need to just kind of work on and look back. One thing I used to always do is when I used to track my trades, literally like extreme track, because sometimes I don't do as extreme tracking as I used to, but I used to track I would put there what my profit to loss ratio, what I intended it to be, and then what I executed on, because that also was something I look back upon. If I can't execute onto the profit to loss ratio, you're going to ruin your process, because you can win on 1 trade, 2 trades. But if you can't keep that process for 100 trades, that's how you get back the money. That's how a lot of the retail traders are giving back the money right now, because they're not being able to stick to a process and a similar risk on the trades. So what ends up happening, some trades go way too far in the risk, and then some trades are little trades, and those little trades might be the winners. And then we're really ruining ourselves. We're just ruining the math. So right now, definitely, guys, stick to that profit to loss ratio. In this case, we got in here around 2130s. The risk was to 21, so at least 60 cents to the upside. So I think always you have to look at trades at the minimum of 2-to-1. I like 3-to-1 trades. So 3-to-1 trades are where I think you can really start kind of working and honing in on trying to look for setups versus only focusing on the profits loss, which 2-to-1 is a lot of times scalping strategies that are just really difficult to trade.
Mitch, I like what you're saying there as far as setting your risk to return. The only thing with that is that, your profit should be open-ended, right? You should know, no matter what, hey, I'm risking let's use round numbers here. I'm risking $100, period. I will not at all ever lose more than $100 on this trade. If it's $101 and you're still holding that trade, you got to ask yourself why. Is it because you don't want to acknowledge that you were wrong? Being wrong is part of being a trader, man. The best traders in the world, their win rates are somewhere between 40 and 60%. That's it. You're not going to win every time, but you can control your risk. There's only 4 possible outcomes. Think of it this way, 4 possible outcomes. A giant winner, a small winner, a break even, or a small loser. There should never at any point ever be a big loser in your account.
Yeah, I mean, I can tell you right now, if you stick to your rules and you're disciplined, you will make it in this business. That's why at first it's all about survival, not thriving. Just work your way through the survival period, then work your way to the thriving period, and you can just live this life. But the key is it's a step-by-step process. It's not like we just walk in here and we're like, oh yeah, I'm a thriving type of trader, you know?
No, that's really well said, right? And that goes for like even caveman, right? The only thing they needed to do was just survive. Once they figured out how to survive, then they can figure out how to, make fire, and then, eventually the Tesla Cybertruck. But we need to just start with one thing at a time, and that one thing is just survive. Keep playing the game.
Yeah, and especially when you're first starting, because a lot of people, they come in here with very small accounts. Just keep your account alive. Just keep playing the game so that you can learn the process that works, not just trying to keep repeating what's not working. All right, guys. So one thing I will tell you is that Christopher is a lot more of a trend follow and tries to keep that profit moving in the right direction. I think you'll kind of like a little bit how I was approaching it here. I was really following the DKNG trend line on up. And when it was really starting to break here, this is when I was getting a little bit concerned. But I actually went back towards what I originally said, which is I measured the flag. The flag breakout here gave us $1.12, right? Sometimes you can measure the pattern there and measure the extension out. So I said, all right, well, from this point, I already took some profit. I took some profit into the 2160s, which was right near that high of the day resistance. So I was okay with that. Now at this point, I was letting the trade work for me. I knew that at this point, no matter what, it was break even on the rest and looking for that reward target. So I let the trade work there, and I had stated 2270. So I went to start looking for it $1 above, and then what I do, I went to a deeper time frame to get away from a little bit of the concern about, hey, this my emotions are starting to ride high, right? Like I have a big winner, I want to take it. So I went to a little bit of a deeper time frame, and I started just watching the 15. And the 15, we started getting a different pattern to develop that went right here and then eventually pushed on up. Once this pushed on up is when I actually was able to get back towards trading because I was doing some work there. And after 12 is when I started getting back onto Benzinga Live. I had an interview during that 11 to 12 period. And then I came back and I started looking at it. And what do? We start pushing on up there towards the 2250s. But one thing I will tell you is that at the moment that I was doing my interviews, there was a stop set at break even. If it went back to that break even, I would have came back and been like, well, what happened to my shares? Oh, okay. I know what happened.
That
I got
right
stopped
there,
out at break even.
That's a pro tip, right? If you can't watch your trade, let the market order work for you. Let that stop loss, let that trailing stop, anything you can do to make sure that you don't lose control of it.
Because the trade's in your favor now. The trade is in our hands now. And when we have the edge, keep that edge. Don't give it back to them. Because it's very easy. It's very easy to give it back to them. It's just like, and one of the things that I try to do is I don't try to set that stop immediately. Because I feel like you'll get those market makers that just attack those stops.
Yeah. Personally,
and so you got to be careful.
I don't set them. I don't set an actual order in the market because I'm watching it no matter what. But I don't set it out there because intraday volatility will tip that off, as everybody who's watching this knows right now. And you'll be looking at it like, what happened to my order? Oh, yeah. No, it was down by a penny and then came back up. Yeah. So for me personally, I'm only trading at the end of the day. And because I'm only trading at the end of the day, I only got like a 30-minute window to make all my decisions. And because of that, I got to keep it really simple, right? So yeah, I love what you did here. My only feedback on this would be, hey man, if it's working for you and you want to press your advantage, start pyramiding those trades, right?
Yeah.
If you're following a moving average, if you're following a trend line that you've drawn, something like that, and it continues to roll for you, you could definitely pyramid into those.
I agree. I agree. I think in the long term, if this was my strategy, if this was my thing as a day trader, that's what I would be doing, because you want to maximize the gains with that potential. But to me, I realized in the game that if I'm going to stick into the day trading game, I'm going to use the least amount of risk to make consistent gains. Because from what I've seen is that a lot of times when I start loading the boat into one play, a lot of times you lose control. Let's just be honest. These are very, very fast plays, especially if you're playing them on like the 1 minute. And, and this is one of those trades that, yeah, it went in my direction, right? But you always got to know you're out. You always got to know. And it got close to my out multiple times, right? I mean, right here, you went to a low of 21.02. The bid was on that 21. So what was I doing? I was watching the time in sales, looking at that. Is the order going through my level? Am I getting a close down below? A lot of times I also will set that risk, and I have to watch, because sometimes you get these extreme wicks where no shares are really selling down there. A lot of times what ends up happening is it closes right above your stop, right above that stop level, and then it takes off. So you got to
That's the
keep
most
your
frustrating thing in the world. When you get stopped out and it just goes right back that way.
Yeah,
I hate
literally
that.
right. And usually it's right on you look at you're like, dude, how did I get the last tick of the day? But yeah, that was it. That was it. That happens, guys. So this was DraftKings, and it's really just more of a lesson here. Rule of 3 coming in, and really look it up, guys. It's Elliott wave theory, the 3-3-3 pattern. A lot of times this comes after kind of what 1 up, 1 down, 2 up. It's a matter of a pattern going through kind of the resistance and the support, building into that peak moment. And then you get that peak moment here. And one thing that I always try to look for is that volume to increase at that peak moment. And that's kind of what you get right here on this candle. If you look at the candle that was the breakout candle right here above the trend, you do get that little volume to come in there. What does that show me? Buyers trying to do the same thing I'm doing, man. Trying to take the same trade. Take the same trade. And if you look on the 5 minute, this was also, I think, cleaner on the 5 minute for you 5 minute traders. If you look here, nice little flag pattern, nice support, boom. When we get back on up through there, we want to make sure that it gets that above. One thing that I also talked about is higher lows. That really starts playing into this one also. All right, guys. So that's going to be DraftKings. I did want to take a look at some of the sectors, see how we're closing off, see how we're looking now. Of course, the SPY kind of making moves here with Pal's kind of comments. Let's take a look here where we're at in the after hours. Looks like we're hanging out there around the 433s, which is not that bad, because we got down all the way below the 430s, and now we're at the 433s. I think we just need to keep watching, right? Because now we're getting kind of this sideways period on the daily chart. So I think anything above the 442s, where it gets above that 200-day moving average, yeah, I'll start looking towards the upside. Maybe we can start taking some trades. Below the 428, that's a monthly support on the SPY. That's why I have a red line drawn there. That's the line that we've been kind of concerned about. If it breaks that red line, I would really be on the watch out territory, because then you're now looking at deeper and deeper time frames, which is what I think the institutionals are watching right now, that monthly candle, and watching it like a hawk, watching to see if it's going to hold that 428 and they can jump on it. But we'll see what happens tomorrow. I think it's a very important day. Tesla, I think, was having a kind of moving type of a day here. Also, looks like it went on up and down there in the after hours. Went down towards 900 there. A lot of volume. Oof, a lot of volume into the close. Look at this. Look at that volume that was going into there. Someone is taking a trade. Which way we know? We don't, but we'll find out.
We got earnings. Were earnings today or tomorrow?
I think they're tomorrow. I think someone's playing into it. So that's what's probably going on here with Tesla. We'll keep an eye out on this, guys. All right, let's go ahead and let's take 2 stocks from the chat. We're doing a little bit of extra time. We're at 5:08 now. I'm going to take 2 stocks from the chat because I know there's a lot of people in here and joined in while we were live. We got over 375 people here. So do me the
Dang.
favor, hit the like, guys. Hit the like. Let's keep it going. All right, let's take a stock from the chat. Can you take a look at Apple before earnings tomorrow? All right, that's not a bad one to take a look at. Apple was one that I kept on watch. I've talked about this 156 level that we tried to break on this 24th date. And really, it was all about the battle at the 170. Once we broke that 170, I've talked about how this Apple has come straight down, almost a really hard trend line being drawn here. And so one thing I want to see is this get back above that trend, because when the trend broke over here at the 176, it's gone straight down. So from this point, this is when I really was concerned about the market, because this was the one stock that was leading us up, the one stock that was the savior, the one stock that wasn't trying to head towards that 200-day moving average, which it's still in bullish concern. But I mean, if it gets down below that 200-day, if Apple gets below the 200-day, because I mean, we could take a look at Amazon. And we draw that death cross
Amazon
yesterday.
is murdered.
That death cross is not something that you wanted to see there on Amazon. So I think with Apple earnings, I'd be concerned, because with earnings, I definitely think you could sweep right through that 156. Next thing you know, you're down towards the next level of support. Next level of support for me, I'd go towards the weekly to really kind of find that. And I'd probably call out this resistance that was in the prior, and it could easily just pop right back down towards maybe around 141 or 128. I definitely don't want to be around for that. So to me, I think it's a little bit risky playing into earnings now. If you own the stock now, of course, do your own diligence, understand where your position is. Are you long-term? What's the time frame? I always talk about your time frame matters so much in your decision making. So know that first. But if you're looking at it for a trade for today till tomorrow, personally, I don't like to play these earnings, especially in a time like this where you could just get swamped.
Yeah, man. Right now, the market trend is down. The stocks trend is down. You got earnings. This is setting up for a brutal situation. Do you remember a couple years ago, Facebook dropped and people were like, this is not possible, but it did. It dropped like 25% on earnings. Netflix just did this a couple weeks ago, right? Yeah, watch your back, Apple. I'm just saying, it could definitely happen.
All right, so it looks like Tesla did come out today. So let's just really quickly just recap that. We're gonna have the report, the report coming on up here. We'll have it live on Benzinga. I think that's at 5:30 that they do they do it late. Their earnings call is super late. So Tesla did beat on top and bottom lines. Earnings here, $2.52 per share versus $2.36 per share expected. Revenue was at 17.72 billion versus 16.57 billion expected. So definitely a beat and a beat. But what happened? It did a very similar move that Microsoft did, with a sell-off right out the gate, and then now recovering. So if this could get back, let's say, back above 980s or 960s tomorrow, I'd be looking a little bit to see the SPY come on up. Why? The SPY has about close, I think it was like 9% of Tesla. So keep your eyes on that. We'll see how that affects it. And if the indices can get out of this zone, really, it's 442 to 424. And that's a huge range for the SPY. I'm personally going to keep watching of course, the FinViz, and keep watching the market breadth, because that's what I want to keep watching. That's what's going to really get me to go bullish here. And I've talked about this level plenty of times, guys. This SMA 200, it's going in the wrong direction. Yesterday, we were at 75%. Now we're at 77%. A week ago, we were at 52%. This is my indicator to watch for when we're going to get back bullish completely. Right now, it's not the move. Look at the SMA 50. 82.5% of stocks are underneath that. That is an insane number. I know my man Christopher would be like,
dude, Mitch, imagine for a second, this was a basketball team. All right. You got, I don't know basketball players. So
I got you. We'll do LeBron James. We'll do LeBron James. We'll do my favorite player, Dwayne Wade.
Dwayne
Back
Wade
in the
sure.
day. All right, and then we'll do Chris Bosh. They're all on the same team.
Okay.
Let's do that. Even
Good,
better. They're
good.
all on the same team.
Well, let's put Shaq on there and Michael
And
Jordan.
Shaq. There you
Let's
go. We
just
got-
make this
we got a
the new
squad.
dream
We
team.
got a
Are
squad.
we ready?
Dream team.
4 out of 5 of the dream teamers have their legs broken. That's what we're looking at. That's 80% of the team on the bench. That's the market right now.
We only got LeBron left, and we're not talking about the young LeBron. We're talking about the old LeBron right now.
Are we
on the
talking
Lakers.
Space Jam LeBron, where it's him in the cartoons? They'll always win, no matter what.
Yeah, no, I mean that's the truth, right? And one thing you got to always look at, and I think that a lot of people, like when we start talking market breadth, they'll be like, "But it lags, it lags." Yes, but that's a good thing, right? Right now is not the time to be calling bottoms. I was trying to call bottoms in a growth environment in 2020, and that was working. Right now, not the game, guys. It's not the game. You know, there was a time where 30-40% returns kind of became, and I'll say it, easy for a second there.
Yeah.
It was. But guess what? That doesn't last in the market. And I've always seen the market, when something just starts seeing too easy, too easy, everyone can make that, boom, takes it away from you.
Yeah.
It's a
And then you
quote that
got
I
people
got.
who are still holding it, and they got their Clove, right? They got their other SPACs, and they're like, what happened? They got their AMCs and GameStops and had the whole round trip, and they're like, what happened? Yeah.
Trying to win the big one with the worst team is going to be hard, right? That's what
exactly.
we're trying to do right now. All right. So thank you for joining me, Christopher. Where can people find you if they want to know a little bit more about yourself?
Well, the best place, if move my giant head out of the way, would be at this website right here, 10minutestocktrader.com. Friday, I am having a live webinar. If you go to 10minutestocktrader.com, you can register for it. It'll be live just like we're doing right now. And I'll show you exactly what I use to spot the bear markets. That way you can skip them the next time that it happens. I hope that you guys will come and register. The easiest way to get there is at 10minutestocktrader.com. Come register. I'll see you on Friday. Mitch, man, thanks for having me on. I appreciate it so much. I've come and taken up your time, taken up all these Benzingers' time, but I hope that I could bring some value. Make the show a little better.
Guys out there, I hope you guys enjoyed the show. Like always, this is always about you guys. What do you want to see more or less of on Money Mitch? Today we covered the Fed. We talked about the SPY. We talked about a trade. We looked at what was hot. We even took a little bit of a screener view and how you guys could be doing it for free. So check it on out, guys. Hit me the thumbs on up and let me know what you guys thought of the show. We'll see you next time. Like always, guys, smash the like. And I know my intro says the bull market is here to stay. I might have to change this. We might have to, guys.
You might have to. Maybe have a temporary one.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here